All right, hey there, Sam with you. We're on a Tuesday here. Tuesday, June 19th, we're kind of midday. We poll the members every day. We poll our members, let them decide what we're going to analyze, and I've got two today for you. First up, we're going to look at the Dow. And just a quick reminder, be sure to, if you like this kind of analysis, be sure to follow us on Twitter. We do a lot of things there where we really engage with our followers, including you'll find there access to our free Discord, our public Discord, where you can kind of come in and sample what our membership Discord looks and feels like, and kind of work that we do there. So I encourage you to give us a follow on Twitter if you're interested. Okay, so that said, let's dig in here onto the Dow. Now, the other thing I should mention is that we had previously been separating through two YouTube channels. We had all the crypto on this channel, and then we had all the traditional assets on a separate channel with the same name, just with an S on it. But we just found that was getting too confusing for people. So these will be clearly labeled and titled as to what we're analyzing here. So you're going to get a combination of traditional assets, equities, indexes, futures, forex, currencies, etc., in addition to what you'll see in crypto. And kind of the main focal point here, and the reason that we're doing that, is to demonstrate that the underlying asset does not matter. It's totally irrelevant to the methodology. This approach is applicable to any chart, any asset. Doesn't matter if crypto, just if crypto's not going your way, or is just drifting sideways, as we have been all year, sideways to lower, and you just don't see opportunity there, well, there's no reason to not be trading. There's certainly plenty of things where there is a very clear opportunity, and perhaps looking into the futures market would be another place for you to consider diversification. So with that said, let's dig in here. So what I have here now is I have a continuous contract of the Dow futures. Now we've done this coin before, or I shouldn't have done this coin. We've done this contract, this futures contract before. So I'm not going to go back through all of the history here, but just to review as quickly as I can. With a 3-day here, we can see this very nice separation here. So we get a very clear 1, 2, 3, 4, and we're in some sort of a fifth here, potentially an extension in the fifth, looking for a top up here. Now these are just randomly placed. I'm not making a prediction or projection based on with this placement here. I just know that if this is going to continue to move higher, that we're likely to be approaching some targets beyond the current all-time high. So digging in here a little bit, on the assumption that coming off of 2016 that this was our last low, and then this is, you could call this the Trump era. So from coming in here from 2016 low moving higher, it's a little tricky to get a clean count on here. I think we have a 1-2-1-2, which would imply substantially higher prices. But let's just take a look here. Now, just very quickly here, I'll just show you this. So from the 2 to the 3 here, you can see we're textbook here on the 4, right? And we've gone right to the third algo target, which would be an approximation of the 1-6-1-8. So this implying that we've got a pretty strong extension here happening in the fifth. So given that, let's dig in here from this 4 low moving higher and see if we can get some sense of where we might be and where the next opportunity is for a Dow futures trader. So I'm going to move from let's go down to an 8-hour and let's see if we get enough clarity there. Moving from the 3-day. So all of this price action is very indicative of a fourth. So additionally here, it's hard to get the separation that I need here. So looking here, first we got to qualify it. So if I allow for this as my 2 and this I get a clean 5 into a 1. Now I have to allow for a very shallow second wave, right? Very shallow relative to the length of the 1. But in a raging bull like this, it happens. So there we have it. Now why do I like this as a third? Well, of course, we're in the highest probability zone for a third right here. All right, there's the 178, or the 1618, 175 pocket here, and we go right, damn near split it, and then we get our reaction. So I think there's a fairly strong case to be made for this as a 1, 2, 3. So if I pull that back so you can see it, coming off of this 4 low, I can get a very clean 3, 4, 5 into a 1, and it would appear that, I guess we're here, we get an ABC down into that 2. So this is the problem All right, well, problem, maybe not the wrong word. This is unusually shallow for a second to be only at the 23.6. Now, we get the 23.6 to the tick, and you can see we hit the Vegas wave just perfectly, but that's unusually shallow for a second. But because of this relationship here, I think there's a better case to be made here. Even getting up into that third, we have to allow for a very shallow fourth within this to get that subdivision, because this from the 2 to the 3, we have to have an impulsive wave. So it's a tough one. So if this were 1, 2, 3, 4, that's the most likely, then we've got a hell of an extension in the third. But even something like just going to our oscillators down here, we can see this being a pivot peak. Let me take that out. That'll just confuse you here. So now from that, all right, so let's consider this. So if we allow for 1, 2, 3, and all of this price action, which is very indicative of a fourth, then that means we've got to consider the relationship between the 2 and the 4. So looking at that, from my pull to my 2 to my 3 high, so this would make sense as a fourth. Now, somewhat deep for a 4. But here we're wicking through the 50, then back. So look how many times we tap the 50, and then we get our reaction off of it. So there's a reasonable case to be made that from that 4, if we allow for an ABC into this low here, we get a truncated C. You'll note it's not as low here. But from that, it would appear that I've got a leading diagonal setting up, which would give me a 1 wave of my 5th wave. So 5th wave being higher up here. So we got our algo target here from this 50. Right? I promise you that's algos that are buying there. You see the reaction. They buy it, defend it, defend it. Now we're moving away from it. So we get our algo target up here. Now nothing says that has to be our high. Whoops. Try and grab this individually. So there's a contender for our 5th, which would be the 5th of the 3rd relative to this larger degree here in white. So allowing for that shallow second, then we again go 1, 2. There's the 3. All of this action gives us our 4. Coming off of that, I've got a leading diagonal, which would imply that all I've done is put in a 1 wave. So if I go, let's get a different color on this. From this here, this is a potential 1 going down for a 2 as we go 3, 4, and 5 to get up to that target. So let me take this down. All right, there we go. So this would be, well, I guess. Yeah, let's do it this way. So let me lower this real quick. All right, so let's go submicro there, and then this will have to go micro. Okay, so we'll go micro. All right, come here. All right, now that makes sense. Okay, so if we allow for that, then let's dig into that diagonal. See if that makes sense. Okay, so looking from that low. So here's my 4 low, and then here's the proposed leading diagonal. All right, now remember, in a diagonal, we're looking for 3s. We're not looking for 5. So it's a little tricky here. I'm going to take this shadow back here. Okay, so if that's a 1, I've got a very deep 2. I've got my 3 in here. Here's my 3. A, B, C down for my 4. Of course, a dramatic overlap of the 1, so clearly a diagonal. And then we're finishing here with a 5. Now, let me pull this off here so we don't clutter the chart too much. So I get that highlighted. Let's take that off. Okay, so if that's a 4 and I've got a diagonal here, well, we got to do a little qualifying. So in a diagonal, we know there's often a relationship of the 4 relative to the start of the 1 through the 3. So the first place I'm going to look, now that I've got a potential 3rd, is I'm going to pull up to my 3rd high, right, and see what I get here. So there's my 4. Right, so that's just textbook. So this is algo front running that target. So here's the front run on the 50. Swing low to the 3 high. Down we come into an ABC. We get our 4. There's a front run on the pivot, or pardon me, front run on the 50. And then we go up and we finish the 5th. All right, so that's a contender now for a 1 wave. Well, if that's the 1, we're looking for a 2 down here relative to this swing here. So from my start down here of my 4. So from that low, if that's a 1, then I'm looking for an ABC to come down here anywhere from the 50 to 786. But so look here, I've got some low volume here at the 618. So that's a reasonable spot to be looking. So since I've got I've got good evidence here to support this as a one wave, well, I'd be sitting now just waiting for another opportunity. And of course, we'd be looking for something that was corrective in nature. So it looks like I may have some sort of an A wave going in. So that would set me up as a possible location here. All right, and again, I'm hypothetical here. So looking for an ABC coming down for my second. It's a contender. All right, anything else I might look at? Well, of course, I'm always going to check for a pitchfork when I've got this kind of separation here. Well, this gets it perfectly. So I get this I mean, there's your corner pocket. Now, granted, that's a very deep. So if I look back at this, we did not have a gold in here because it was so deep. Right, we go through the 786, but from that pivot, on the assumption those three pivots hold, 80% probability of making the median line, you actually make it here. But this good structure in this market geometry, I like the look of that. That supports that case there. Now then I might just double check it here from my 2 to my 3 if I've got anything to support that. All right, so well, you can make the case here that a failure to make the median line, this is Andrew's trading principle number 4, a failure to make the median line implies weakness, which sets up a move equal to or greater than the swing that failed to get there. Right, so from that low, potentially here now, this is our reaction. That's the implied weakness from not making the median line. Sets us up as a possible A wave. So that's what I'd be watching for, so pushing that over. And again, I don't know that it goes down that low. That's just an area I'd be looking. I'd be paying attention at the 50 as well. But I want to see the price action here. I want to see nice, clean, clear three-wave structure to support the idea that I'm correcting this diagonal into a one-wave. So given that, let's pull this off now here. So if we allow for that, this is what I'm looking for. So it looks to me like this is an A wave going in. Right? When we'll look down here. So if I pull that off here. So from that, the other thing we'd look for is a relationship between 1 through 3 as a potential target for our fifth. Well, there's the 618, very common in a diagonal that we'd get to the 618 and roll over. And as I showed you, additionally here, I would check it. Even though there's the stronger tendency is from the 4 low to the 3 high, I would pay attention to what happens here. I would want to check that and you see how good that is. So here's that 50 here, and then perhaps the algos were using this. Right? Algos pay no attention to Elliott wave. They do not care whether this is a leading. All they're looking for is swing high, swing low. So we as Elliott traders can look for that tendency if we think we've got a diagonal, but an algo is just working from dominant pivots. Swing low, swing high, there's a 50, there's a target. So that might be why we failed on the 4 low to the 3 high. Looked like we came a little short. This looks much closer. That's very typical front run on the target. So a lot of evidence to support this structure here going up as our one wave. So we sit and wait. Now, could you trade the 50? Well, let's see. Let's go here from my swing high. All right, could you trade the 38? It's not uncommon for the A to hit the 38 of the entire move. Sure, if you want, but you certainly could, right? So I'd be down at even a smaller time frame, but that's really not. You know, you could make a play for a scalp there. Okay, so you look at that and you think, okay, well, we're coming. Point of control is right here. Market, we've got a lot of buying transactions happening here. So that's what point of control is showing you. Most of the trading volume in the given range, the visible range here, is happening right here at this peak here. So now coming down below it and tapping the 38, we get a little bit of a low volume node here, implying that the market does not accept that, is moving away. Now, for me, I would not be a buyer. I would not trade that B. I might look to trade the C coming short, looking for the next opportunity to be a buyer. Remember, in futures markets, it's just as easy to go long as short. So no hesitation for me to go short rather than crypto, where it's just infinitely easier to be long. So I'd be watching there. For me, I just don't think there's enough there. I'd look for the opportunity. Now, so here's how I'd trade that. So if we go from that swing high to the swing low, right, we're looking for that 618 here. We know it can be between the 50 and the 786, just like a wave 2. Now, this is kind of interesting that if we were to go up here, I get my algo target right on the 50. Interesting. And now, of course, that assumes that this pivot low holds. So I'm going from swing high to swing low. Now, if I'm going to come up, so if that's my if that's my A wave, and I'm coming up for my B wave here, I'd be looking anywhere from the 50 to the 618, looking for that reaction, right? This pivot has to hold. Then coming back down here where you get the combination, so you've got true confluence here. Right, so you've got the 50 of the swing low to swing high. You've got an algo target. So there's an opportunity to be a seller coming down into that, and then reverse and be a buyer. Those are the best when you get them coming and going. So you got an opportunity here. Take profit. You know, if you like the look of it, if you get the reaction there, you can anticipate from a dominant swing to a swing low to a swing high. There will be algos sitting there ready to buy it. Right? Not a guy, you know, with his finger on a mouse. That's just software that's just going to buy it. Right? And then we'll get that reaction that potentially now drives us up for the start of our third. If you want to be a little more conservative about that, if you take the short down here with that target in mind, and you don't like the idea of just buying into that, well, you can always do something like this. Wait for the reaction. If it holds, then take the first pullback and then go for the third. Right, so this is the safer trade, as we know now where the stop is very clear. You set the stop below that pivot, so you've got an opportunity to be a buyer there with a little more confidence and more clearly defined exit, right? Rather than saying, okay, I'm going under the 65. So you might look here as a buyer here, saying, oh man, if I'm going to go under the 65, that might be more risk than your trading plan would allow for. How about I say it that way? Your trading plan might not allow for that, but certainly depending on the number of contracts that you're trading. Right? So something to consider. If you want to wait for that to pivot and show its hand, you get a reaction there. There will be a little retracement, because the reason you get that little retracement is because the people that buy it here, or the algos that buy it here, whatever the purchase here, that reaction, then they start to take profit. Right, that's what causes it. So the scalpers will buy that as they get to whatever their targets are. They'll start selling to take profit. That drives it down, sets it up the next leg. Right? All right, that's what I see, guys. All right, so again, don't forget to follow us on Twitter. If you're interested in mastering this kind of methodology, you certainly could join us over on our members Discord, and you can get to that, all of the information there, from our website at TradeDevils.com. And if you're kind of curious, thinking about it, but you want to kind of have a look at what it's all about first, or maybe take a sampling, well, subscribe to us over on Twitter. You'll find pinned to the top of our tweet stream will be the link that will get you access to the public Discord. We can kind of sample what we're all about. All right, guys, with that, I will call that a wrap. Got one more video today in traditionals per the members voting, so I'll be back to you shortly.